How's it going, everybody? This is BeatTheBush. With the S&P 500 down about 16% from the peak, you're probably thinking of selling. This is essentially market timing and you're trying to buy back at a cheaper price sometime in the future. This does not work reliably, and I know the whole psychology behind it, so I want to kind of talk you guys through on trying to convince you not to sell. This video is brought to you by Moomoo. You can get 5 free shares of stock just for signing up. It's a free trading app and it'll allow you to buy more stock market index funds like VOO. Check out my referral link down in the video description below. If you follow the news closely, a lot of bad things has been happening, right? The pandemic, the crypto crash. There's going to be a couple of interest rate hikes the rest of the year in order to calm high inflation. And yes, there's high inflation right now, there's high food prices, there's high gas prices, and we're looking at a possible stagflation or recession where there's a period of economic stagnation. There's no growth or anything, therefore there's not going to be more earnings, and also there's a high inflation. There's also a US-China trade war, there's tensions going on, there's US-Russia tensions going on, thinking about a possibility of a war going forward, so there's a lot of uncertainty. There's also climate change. Things are looking kind of bleak, so you might be thinking, this is it. This is the end of the world. It's time to sell because it's never going to come back for some reason, right? Here is what usually goes through someone's head, and I've gone through this probably 2 or 3 times, right? Once during the dot-com bubble, once during the housing bubble crash. When the stock market goes down, every single week it seems like it trickles down a little bit more. For the most part in the beginning, you hold on because that's what people say. People say, dollar cost average, buy into the index fund. But as you're holding on to all this stock, maybe hundreds of thousands of dollars or whatnot. Maybe you only have $10,000 or $20,000, but you work hard for this money. And every single week, you see it go down a little bit more. It's like, 3%. And then next week, it's like down 1%. Next week, it comes back up 5%. You're like, oh, okay, this is great. But then overall, the trend is going down, down, down. And then you can only take this for so long, right? Maybe like 2 or 3 months of week after week declines. You see your portfolio kind of go down, down, and then you might start to think, maybe I should just sell right now. So going forward, you won't have any more losses, and this might work for some people. You might hear someone else sell, and then they're like, oh, I'm so happy, right? I'm not taking any more losses. And then you see the next week, yeah, it certainly dips some more. It's going to keep on dipping, and then they feel great about it. But then what happens is, at some point in the future, maybe 6 months into the future, maybe a year, at most probably 2 years or so, things start to recover. But when things start to recover, they have to try and buy back in. So when things come up a little bit, they refuse to buy back in. They think that, it's not gonna completely recover all that much. But when it does recover, it's like, oh, okay, maybe I'll wait a little bit longer. And then a little bit longer. And then before you know it, the stock market almost completely recovers. What goes on in the mind is that once it comes up, it's like, maybe I should wait a little longer so that you can buy it at a discount. But then that day never comes. And then you fail to buy back in because you feel like it's getting ever more expensive. Now, here's the part where I'm trying to convince you not to sell. Yes, if the market goes down, it might take many years before it comes back up and then you can break even or whatnot. But it's going to happen. Why do I know this for very, very high certainty, 99.9%? Because I don't think the US economy is going to implode. As long as the companies in the S&P 500 is going to be worth something, it's going to be income producing. Someone is going to pay that amount in order to buy a share of those companies. Therefore, inherently, it's worth something. I want you guys to take a look at this S&P 500 chart over here, all the way from, I think, 1920s or so. So this is about close to 100 years of S&P 500 history. And you can see it just keeps on going up. Is it going to go to zero? I highly doubt it. And you can see those gray bars are periods of recessions. It goes through a period of downturn. It always happens. And then it always comes back roaring. What's the sun? Ugh. I gotta sit back here a little bit so the sun's not in my face. The proven way to make money is to buy into stock market index funds and dollar cost average. You just keep on buying as you earn the money. right? You don't want to buy in one lump sum, trying to time the market at a low or something, or sell at a high. You should be keeping it even if it drops down and you just buy more. Even Warren Buffett recommends most investors to buy a low-cost index fund and dollar cost average into it. Now, do you think he's lying? I don't think he is, because this is kind of like a common knowledge amongst investors, savvy investors at least. But I totally understand for someone that does not want to follow this, because I personally have not for the longest time. I'm thinking, oh, maybe I can market time things, sell it at a high, buy it back at a low. But then I've tried for so many years and it's never worked. But the truth is, I think in order to hold even during a market downturn, it's very, very difficult. So you really have to convince yourself that all of those losses that you're taking today is going to come right back and is going to give you even more profit. So this will give you the courage to buy right now, even though it's dropped quite a bit. Now, is this the bottom of the market? Should you put all that extra cash that's been laying on the side all in right now? No, you just kind of buy a little bit into it. If it drops another 10%, let's say, or even 5%, you just kind of keep on putting more into it. You can do it different ways. You can do it on a period of every single week you invest more, or you can do it in a way where if it drops by 5%, you invest a certain percentage of your cash in, all the way until maybe if it's like 50% down, then you're completely invested 100%. To mentally prepare you guys what might happen in the next 2 years or so, you might see your portfolio never reach its peak again. For the next 2 years, you're gonna have to see it kind of like limp along for a really, really long time. But this is what it takes to reap the gains of being a long-term investor. And I think this is the most surefire way to make gains. I'm just basically ready to throw in the towel and just forget about this, not look at the stock market daily. Don't look at all the bad things that's going on. Don't even look at the portfolio even. I'm gonna see it go down, down a lot. I've seen my portfolio go down about 25-30% or so. So I'm trying to not look at it, and the less you look at it, the better, because then it's gonna keep you from feeling bad, keep you from thinking that you should sell eventually. So I really hope this video helps you guys out in trying to convince you not to time the market and sell right now. Rather, dollar cost average, buy more into it if you can, if you have extra cash laying around. And I really hope this video helps you guys out. Don't forget to give me a like and subscribe for more. Thanks for watching.